warahmatullahi wabarakatuh. Today we will present case study 2 on BesiCo company. My name is Nur Shafiq.
My name is Nur Atira Farhana.
My name is Nur Atika binti Rosli.
My name is Siti Nur Syuhada binti Raslain.
My name is Farah Nabila binti Kamaluddin.
And my name is Hasiza binti Arifin.
Okay, my name is Nur Atira Farhana and I will start on the audit queries. The first question is how BesiCo assess its going concern ability and our future plan. According to IAS 1, financial statements are prepared on a going concern basis unless the management or directors either intend to liquidate the entity or cease operations or have no realistic alternative but to do so. To be deemed a going concern, BesiCo must be able to generate and or raise enough cash to pay its operating expenses and make appropriate payments on that. So in this case, BesiCo current liabilities exceed its current asset and has defaulted on some borrowing obligation. Giant Steel Plant had also temporarily ceased its operation. However, BesiCo decided to continue to operate as going concern as a foreign investor from China will take part in our company restructuring. This will help our company to pay our operating expenses and help in paying our debt obligations. Hence, our future plan to mitigate the going concern issue is we will do a restructuring plan that will include some closure of subsidiaries, retrenchment of staff and others. This will be explained more by Farah Nabila and Nur Atika. Question 2 is the justification on the appropriateness to continue to record deferred tax asset in the balance sheet. So in accordance with IAS 12 income tax, BesiCo consider the following criteria in assessing the probability that taxable profit will be available against which the unused tax losses or unused tax credits can be utilized. So the criteria are whether BesiCo has sufficient taxable temporary differences relating to some taxation authority and some taxable entity, which will result in taxable amount against which the unused tax losses or unused tax credits can be utilized before they expire, whether it is probable that BesiCo will have taxable profit before the unused tax losses or unused tax credit expire, whether the unused tax losses result from identifiable causes which are unlikely to recur, and whether tax planning opportunities are available to BesiCo that will create taxable profit in the period in which the unused tax losses or unused tax credit can be utilized. Therefore, BesiCo decided to continue record the deferred tax asset in its balance sheet as we have a restructuring plan and also a potential investor from China that will participate in our restructuring plan. We can ensure that BesiCo will gain its profit back within 3 years' time. At the moment, if we did not recognize the deferred tax asset, our tax expenses will be too high. So that's why we continue to recognize the deferred tax asset despite the company is operating at losses in these recent years. Next is the justification on the appropriateness of impairment of PPE balances at cost basis as well as its revaluation reserve. The aim of IAS 36 impairment of asset is to ensure that assets are carried at no more than their recoverable amount. If an asset's carrying value exceeds the recoverable amount, then the asset is impaired and the standard requires a company to make provision for impairment loss. The requirement to recognize and measure the impairment loss are when recoverable amount of asset is lower than the carrying amount, the carrying amount should be reduced to the recoverable amount. The difference between the reduction from the previous carrying amount to the recoverable amount is known as impairment loss. The impairment loss should be recognized in the SOPL immediately unless the revaluation decrease treatment is prescribed in another accounting standard. BesiCo measured its PPE at cost model where cost of PPE minus depreciation expenses to get the carrying amount of the PPE. Yes, there is an indication or evidence of impairment as said by the auditor because of machine idle due to temporary stop business operation. After we recalculate and do some investigation, we found that the fair value less cost or its recoverable amount is more than the carrying amount. Hence, there is no impairment loss need to be recognized. Next is on the justification on the appropriateness of reporting inventories at cost basis. In accordance with the standards, the inventory should be measured at the lower of cost and the net realizable value. The cost of inventory should comprise all costs of purchase, cost of conversion and other costs incurred in bringing the inventories to their present location and condition. Materials and other supply held for use in the production of inventories are not written down below cost if the finished products in which they will be incorporated are expected to be sold at or above the cost. However, when a decline in the price of materials indicates that the cost of finished product will exceed the net realizable value, the materials are written down to the NRV. In such circumstances, the replacement cost of materials may be the best available measure of their NRV. Therefore, BesiCo expects that all of its inventories are not damaged and the selling prices will not decline as their finished products also are expected to be sold at or above the cost, and there is no decline in price of the materials that will lead the cost of finished products to be exceeding the NRV. Therefore, due to these circumstances, BesiCo decided to record its inventories at cost basis. Lastly, for the audit queries is the justification on the adjustment needed for the onerous contract. In accordance with IAS 37, if entity has a contract that is onerous, the present obligation under the contract should be recognized and measured as a provision. The standard defines that an onerous contract as a contract in which the unavoidable cost of meeting the obligations under the contract exceed the economic benefits expected to be received under it. The unavoidable costs reflect the least net cost of exiting from the contract, in which it is the lower of cost of fulfilling the contract and cost of compensation or penalties that arise from failure to fulfill it. So in this case, there is no provision or compensation made for the onerous contract between Giant Steel and Besi DRI. Giant Steel should indemnify Besi DRI for the losses suffered from such sales. Hence, we will make an adjustment for that matter to recognize the provision based on IAS 37. To recognize the provision, we will first assess the present obligation as a result of past event and future event of contract. Second, assess the probable outflow of resources embodying economic benefits that will be required to settle the obligation and assess the reliable estimate that can be made of the amount of the obligation. So, the amount of provision that will be recognized is the lower of cost of fulfilling the contract and cost of compensation or penalties that arise from discontinuing the contract. That's all from me. I will pass to the next presenter. Thank you.
Second, I will explain on financial statement analysis of BesiCo, which is content of financial performance and financial position. In preparing the financial statement analysis, we are using two methods, which is vertical and horizontal analysis. Vertical analysis is a method of analyzing financial statement that lists each line as a percentage of a base figure within the statement. While for the horizontal analysis is a method that shows changes in the amounts of corresponding financial statement items over a period of time. Horizontal analysis is using the formula given, amount in comparison year minus with amount in base year dividing amount in base year multiplied by 100%. This is the statement of profit or loss using the vertical and horizontal analysis. In the statement of profit or loss, we are using revenue as a base year. While for the statement of financial position, we are using total asset as a base year for the vertical analysis. This is same goes to the total equity and liabilities. For the first analysis, the revenue of BesiCo has been decreasing by 66.38% because of the inability to sell more, and also the customer tends to buy from China. The changes in inventory, finished goods, and work in progress also decreasing by 10.58% because of the closing stock is higher than the opening stock since since the company has stopped the operation. For the employee benefits expenses, they has been reduced by 17.07% because of the employee refreshment happened in the year 2016. The depreciation remains actually because there is no additional asset for the year 2016. For the inventory written down, there is reducing amount which is 94.31%, since there is less production in the BesiCo. The next analysis is the taxation. Taxation is lower than the year 2015 2015 by 108% because of the higher tax provision for the year 2016. BesiCo have a net loss because of the cease operation that incurred the reducing in revenue by 14.59%. The next analysis is the statement of financial position of the BesiCo. First, the non-current asset is slightly decreased by 5.84% in the year 2016. This is because of the disposal of assets, deferred tax asset, and also the decreasing in the investment in associate. Next, the current assets of BesiCo also incur decreasing by 40.43% for the year 2016. It is because of the reducing balance in the bank and cash balances by 37.02%, which is 74,810. Next, the total equity has been increasing for the year 2016 by 53.26% due to the increasing non-controlling interest and the additional reserve. Meanwhile, for the current liability also have been increasing because of the higher payables and also higher loans, which is 21.16% and 5.70% respectively. Okay, for the last analysis is the non-current liabilities of BesiCo. Non-current liability for the BesiCo is slightly lower than 2015 by 17.93%. This is because of the decreasing deferred liabilities and also increasing in loans and borrowings and also bonds and debts, which is 1.09% and also 1.29% respectively. Okay, that's all from me. I will pass to the next presenter.
We're moving on to the next part, which is financial ratio analysis. Next. So there are several types of financial ratio that can be used to assess the company performance. First is profitability ratio. It is used to measure company's ability to generate income. So first, we have calculated the gross profit margin ratio. In 2016, the gross profit margin ratio is 14%, while in 2015, 19.47%. So in 2016, for every 1 ringgit sales, BesiCo had earned 14 cents in profit, while in 2015, BesiCo earned 0.19 cents in profit. The gross profit margin indicates how much profit BesiCo made after paying off its COGS. To be compared with 2015, there were poor performance in 2016 since there are decreases in the ratio by 5.47%. We have net profit margin ratio. In 2016, the ratio is negative 79.91%, and 2015 is negative 31.45%. This means in 2016, BesiCo had spent 1 ringgit 80 cents for every 1 ringgit in revenue, while in 2015, it spent 1 ringgit 31 cents for every 1 ringgit in revenue. The negative profit margin means the costs and expenses spent are higher than the sales generated. And in 2016, there were poor performance to be compared with 2015 as the ratio decreased by 48.46%. For the third ratio, we have calculated operating profit margin ratio. In 2016, the operating profit margin ratio is at negative 43.93%. And that means for every 1 ringgit sales, BesiCo generates 44 cent losses, while in 2015, BesiCo generates 16 cent losses. The negative operating profit margin means the inability of BesiCo to control the cost of operation, as the revenue generated are unable to cover the cost. And to be compared with 2015, there were poor performance in 2016 as the ratio is decreases by 27.83%. Next is on the return on asset ratio. In 2016, the return on asset ratio is negative 19.73%. This shows for every 1 ringgit of asset, BesiCo had generated 90 cent losses, while in 2015, negative 20.43% means BesiCo generated 20 cent losses for every 1 ringgit of its asset. Both shows negative or return on asset ratio. That means BesiCo does not use its assets effectively to generate income. The slight decreases of 0.7% shows the performance is better in 2016 to be compared with 2015. And lastly, for return on equity ratio, in 2016, 34.39%, while in 2015, 61.71%. The return on equity resulted from net loss and negative equity. Therefore, it means the continuous losses had led to negative weight of BesiCo. However, to be compared with 2015, the performance was slightly poor as there was decrease in the ratio by 27.32%. For the second type of ratio is liquidity ratio. Liquidity ratio is used to measure companies' ability to repay short-term obligation. So firstly, we have calculated current ratio. The current ratio in 2016 is 0.11. That means BesiCo's current assets are 0.11 times more than its current liability. While for 2015, BesiCo's current assets are 0.21 times more than its current liability. However, both current ratios shows amount below than 1. Therefore, it means that BesiCo does not have enough liquid asset to cover its short-term liability. And 2016 shows poor performance to be compared with 2015 as the ratio dropped by 0.1%. We have calculated a quick ratio. In 2016, the quick ratio is 0.07 and 2015 is 0.10. In 2016, for every 1 ringgit of current liability, BesiCo have 7 cents in its current asset, while in 2015, BesiCo have 10 cents in its current asset. The quick ratio that less than 1 indicates that BesiCo does not have enough quick asset to pay its current liability, and the performance also poor because the quick ratio is decreases by 0.03%. Next, we have cash ratio. The cash ratio in 2016 is 0.02. And that means BesiCo only has enough cash to pay off 2% of its current liability. While in 2015, BesiCo has enough cash to pay off 4% of its current liability. Both cash ratio that less than 1 indicates that BesiCo has insufficient cash on hand to pay off its short-term debt. And to be compared with 2016's performance is poor because the cash ratio is decreases by 0.02%. We have calculated also on solvency ratio. Solvency ratio is used to measure company's ability to meet its long-term obligation. So this is debt to asset ratio. In 2016, 1.57 and 2015, 1.33. Debt to asset ratio that is greater than 1 shows a considerable portion of BesiCo's asset is funded by debt. And 2016 performance was poor to be compared with 2015 as the ratio increases by 0.24%. Next, we have debt to equity ratio. In 2016, negative 2.74 and in 2015, negative 4.02. The both negative debt to equity ratio means BesiCo's value is negative and the investment is purchased by debt with higher interest rate and borrowing costs. And the poor performance in 2016 because the ratio is increases by 1.28% to be compared with 2015. For the last type of ratio is efficiency ratio. It is used to measure company's ability to utilize its asset and resources. Firstly, asset turnover ratio for 2016 0.25. This means BesiCo generated 25 cents for every 1 ringgit in its asset. And 2015, it had generated 65 cents for every 1 ringgit in its asset. Asset turnover ratio shows how well BesiCo had used its asset to produce sales. However, to be compared with 2015, the performance is poor because the asset turnover ratio decreases by 0.4%. Next, inventory turnover ratio. In 2016, BesiCo is able to rotate its inventory in sales 4.66 times in the financial year, while in 2015, it's able to rotate 5.79 times of its inventory. The high inventory ratio shows BesiCo is selling its goods quickly and there is considerable demand for their products. However, the performance in 2016 is dropped because of the ratio decreases by 1.13%. And lastly, we had calculated this sales in inventory ratio. In 2016, BesiCo is able to turn its inventory into cash in 78 days, while 2015 it only took BesiCo 63 days to turn its inventory into cash. The day sales of inventory is the average number of days BesiCo takes to sell off its inventory. So if we compare the both years, the 2016 performance was poor to be compared with 2015 as it took as BesiCo took longer to sell off its inventory. So that's all from me. I will pass to the next presenter.
Okay, I will continue with the retrenchment and layoff arrangement from the perspective of human resource manager. Okay, firstly, we will discuss about a few of the reasons to the retrenchment and the layoff planning. So, the influx of the lower priced steel products has resulted in loss to the giant steel. So, the market price of steel is too low for giant steel to make profit. Giant steel production has dropped from 2011 to 2015 until there was no production in 2016. Giant Steel was not encouraged to continue its operations since there was no new orders. After several rounds of retrenchment, only around 1,000 of employees remain. If the Giant Steels will continue to closure, the Giant Steel operation will lead to the final round retrenchment, of which 800 workers will be terminated. So the issue here is the decision to retrench the terminate the employees in immediate and in sudden is not ethical and might be not unfair, and it might be unfair for the workers since they have worked for Giant Steel for more than 10 years. The workers also stated that Giant Steel has paid them half of their monthly salary since January. So move on to the next slide. So if the retrenchment and employee termination is carried out, there will be some issues and more problems might arise for BesiCo. The employees might issue legal lawsuit to the company as they are going to terminate like almost 800 employees and they are already being paid half of their monthly salary since January. If this happens, the whole company reputation might get affected. This is a very risky as the potential investors and consumers might lose their interest in BesiCo. Other than that, the company also have to pay for the termination fee or compensation, which gives the BesiCo have to incur more additional costs. The laid off worker might even not coming back. If Giant Steel happens to get back to their normal operations, we really need the human resource, which is the existing employees. Okay, next, for the next slide. Here we are planning several solutions for this retrenchment and layoff issues. We have decided to close down furniture segments in order to save costs and save Giant Steel as furniture segment is to be seen as the segment that generate less revenue and even created loss. The assets from the furniture segment such as plants and equipment will be disposed and the proceeds from the disposal will be used to cover the cost of Giant Steel. So the retrenchment of workers can be avoided. The workers that are currently working at furniture segments, we will give an early notice to lay them off and they are going to be transferred to the steel segments. While waiting for the Giant Steel to come back to their normal operations, instead of we terminate the existing employees, we will transfer the employees in the Giant Steel to the other subsidiary companies in the steel segment temporarily. So since the existing operational employees have the well-trained skills and expertise in the steel's production and operations, it will such a huge loss for BesiCo if we just terminate those employees in a sudden decision. With this way, those employees that we transferred to the other subsidiary companies might contribute some technical knowledge and value added to those subsidiaries. In terms of cut costs of operational employees' salaries issue, since we have decided to sell some plants and equipment from furniture division, we feel that it will not be a problem to pay for their monthly salaries since the cost from the furniture division will be used to cover the cost. In this way, the employees will satisfy, and I think that we are not doing any unlawful decision, which is a safe way for a BesiCo. For the next part, I will pass to the next presenter, which is Farah Nabila.
Okay, I will explain relating to practical solutions to address the problems faced by the BesiCo. Okay, for steel division, the problem is the company was just ill-equipped and would not be able to compete in a liberal marketplace. It is because the company was too conservative or traditional and did not modernize its plants. To cater this problem, Giant Steel should keep up with the technology so that it can improve the efficiency of production, improvise their equipment, invest more to use sophisticated technology, and modernize equipment in their production line. Investing in digitalization to cope with the changes and opportunity made by IR4. Okay, the second problem is the product quality was not promising and kept fluctuating, especially when the exact specification was not met. Therefore, the Giant Steel need to always do inspection and maintenance to the equipment so that the company can produce good quality product. Next, Giant Steel is only focused on upstream products, which are steel billets and steel slabs. Therefore, the company need to diversify production by producing downstream product too. Okay, lastly, Giant Steel was not competitive in its pricing and delivery management as it changed premium price to the buyers. So the company need to offer lower price than the other competitors and at the same time need to maintain the quality of the product. Okay, problems that faced by the BesiCo Property Division is due to tightening measures implemented by Bank Negara Malaysia to curb rising household debt. Bank Negara Malaysia's Credit Counselling and Debt Management Agency recommends that debt repayment ratio for individual households at the time to be 30% and 40%. The next problem is the cautious spending among the consumers since the GST era. This is the reason why residential segment of Malaysia's property market become less heated. Therefore, BesiCo's property division has reported lower sales revenue and operating profits. The solution is, although there is a tightening measure, there are few incentives provided by government, such as youth housing schemes and rent-to-own scheme. Rent-to-own scheme is catered to aspiring homeowners who find it difficult to come up with the initial 10% down payment. The company should offer a discount so that it will attract more customers. Okay, problems that is faced by furniture division is the contribution was too small and it had struggled hard to break even. Therefore, BesiCo are planned to shut down furniture division and focus more on steel and property division. By closing this division, it will reduce significant costs that can be used to other division that can contribute higher revenue to BesiCo. Other than that, all existing assets associated in furniture department can be liquidated or can be sold to cover some of the expenses, such as compensation payment for layoff employees.
Okay, next, I will proceed to the fourth question, which is: do we agree that the consulting firm should be proposing the regulations plan to both the board of directors and managing directors of BesiCo and provide our justifications? As we know, BesiCo has been classified as PN17 due to the continuous losses that have been eroded its financial positions and it become a company that with net liabilities. Okay. What is PN17? PN17 stands for Practice Note 17/2005 and it is issued by Bursa Malaysia relating to the companies that are in a financial distress. Next slide. What is impact if the company being classified as PN17? When a company is announced as a PN17, company has to undergo a few exercises to comply with requirements of Bursa, in which failing to do so, which result in suspensions in trading these securities or being delisted from the market. If the company are being delisted from the market, the consequence of delisting can be significant since stock shares not traded on one of the major stock exchange are more difficult for investors to research and harder to purchase. This means the company is unable to issue new shares to the market to establish new financial initiatives. What can BesiCo do to being discharged from being PN17? First, BesiCo need to complete the implementations of approved regulation plan, and second, submit an applications and necessary document to BUSA to prove that it is no longer a PN17 company. So, from these informations, we agreed that the consultancy firm should proposing the regulation plan to both board of directors and the managing directors of the BesiCo. Why BesiCo need to have a regulation plan? In order to maintain the listing status, BesiCo need a regulation plan to submit the proposal to the approving authority to restructuring and revive the company. From what happened in the BesiCo, investment from China is so important for BesiCo to fix the problems that currently faced by the BesiCo. If BesiCo being delisted company, it will convince potential white knight investor from China to revive the company. From this investment, it can be used to help the BesiCo as a whole to improve its performance significantly, especially its financial performance. As my friends mentioned earlier, we decided to suggest to the BesiCo to only focus on its skills and to only expand its skills divisions and maintaining property divisions, and also close down its furniture division. This proposal is based on these informations that have been seen in the screen. Why we do such decision? Why BesiCo need to maintain its steel division even though it incurs some losses? Because BesiCo own the highest shares in Giant Steels. With the investment from the China, it will help the BesiCo to expand the Giant Steel divisions, and also the BesiCo can obtain any grant from government. Okay, for the property division, although had reported lower sales revenue and operating profit, it was a profitable segment. So, in our point of view, BesiCo need to maintain these divisions. However, this division can be improved by some grant and incentive that have been mentioned by Farah Nabila just now. For furniture division, we propose to close down this division because the contributions of revenue for these divisions was rather small and it had struggled hard to meet its break even. Last but not least, for my last point, as the organization as a whole, BesiCo shall restructure its management. It shall appoint a new management that have competency to manage the company that create value for its shareholders directly and its stakeholders indirectly. Managers should balance competing stakeholders and shareholders' objectives, making decisions in the best interest of all. Not only focus on maximizing shareholders' value, but also consider the interests of the stakeholders. Current management, especially the CEO, seems to not performing his responsibility as expected he should do, resulting negative outcome such as stated in the case. Therefore, I would suggest the BesiCo to restructure back its management. That's all from us. Thank you.